Welcome back, ladies and gentlemen. Big breaking news coming in. The government has now finally released the GDP numbers, or the GDP growth rate numbers for the Q4 are out. It was 7.4% recorded for the quarter ending for financial year 25. Record 7.4% real GDP growth reported in the fourth quarter of the last fiscal financial year, 2024-25. India has now officially reached its full year forecast, which was retained at 6.5%, and India has met the 2025 financial year fiscal targets for the GDP. That's the big breaking news update coming in after a little bit of a slump in the quarter 3 of fiscal year 2025. India has recovered with a remarkable GDP growth of 7.4% on the real GDP terms for the fourth quarter of fiscal year 24-25 that ended in March 2025, and the real growth has now been pegged at about 6.5% for the full year. Massive recovery by the Indian economy in the fourth quarter of the fiscal year 2025, something that many economists were projecting India may not be able to pitch. Initially, the IMF had even pegged India's growth rate to be at around 6.7%, but somewhere down the line in the month of December, during some quarterly slumps in the third quarter, the number was revised to 6.5, and India has met its target. India, for the next 2 years, remains the only economy in the entire world that is expected to retain a 6% growth rate. It was just a few days ago that India surpassed Japan to become the fourth largest economy in the entire world, crossing the 4 trillion mark. And now great news coming in for the Indian economy that there is a 6.5% growth that has been reported.
Absolutely. So big breaking news coming in as far as India's economic growth is concerned. What we're learning so far is that the real GDP has been estimated to grow by 6.5% in financial year 2024-25. Nominal GDP has witnessed a growth of 9.8 in the financial year 24-25. In quarter 4 of FY 2024-25, the real GDP and the nominal GDP has been estimated to grow by 7.4 and 10.8 respectively. The construction sector, is what the government is saying, is estimated to record a growth rate of 9.4% in this financial year, followed by 8.9 growth rate in public administration, defense and other services sector, 7.2% growth rate in financial real estate and the professional services sector. So during quarter 4 of financial year 2025-26, construction sector has witnessed 10.8% growth rate, followed by 8.7% growth rate in the public administration, defense and other services. All right, let me go across to Mr. P.K. Basu for more on this. What we're learning so far, sir, is that during quarter 4 of financial year 2024-2025, the real GDP has seen a 7.4% growth rate. How do you see this?
Well, it's broadly in line with expectations. Growth for the full year is 6.5%. It is the slowest in the past 4 years. But India has had a spectacular 3 years of growth prior to this, with average growth of 8.8% over the 3 years. And I would look at 6.5% as more or less the baseline. Growth should be a lot faster going forward, given that this year we've seen a substantial tax cut for pretty much all income taxpayers, and there's likely to be a much lower interest rates over the course of the year, given that inflation is coming down. So I would expect growth to be well over 7.5% in the current fiscal year.
Well, absolutely. And I must also mention that the construction sector, be it public administration, as I was pointing out, defense and also financial real estate and professional sectors, they have also seen a growth. How do you assess this?
Well, I mean, construction is growing rapidly. There's good demand both on the infrastructure side as well as with housing beginning to pick up. So yes, construction but it's a relatively small sector. What you really need to see is a strengthening in manufacturing, which has been somewhat disappointing over the last few quarters. You need manufacturing to gather much more momentum. And on the services side, most of the sectors are doing okay, with particular strength in the financial and business services sector. What you really need to see is is a strengthening in manufacturing, which has been the relative laggard in terms of growth.
Well, absolutely. And if you also talk about the defense sector, keeping in mind in the backdrop of the increase in defense spending, how do you see the growth in that specific sector?
Well, that's a component of manufacturing that is beginning to see substantial growth. You see it in the defense companies that are listed on the stock market. Their valuations are all very, very rich. They're all at price-to-earnings ratios of between 40 and 150 times. So very, very expensive. But that is reflective of the very strong growth in the defense sector that we're seeing, particularly because of the strength of the indigenous manufacturers and things like the Akash and BrahMos systems, how well they performed during the brief wars of this month, 7th to 10th May. So we are seeing a substantial amount of demand for those stocks. But as a percent of the manufacturing sector, they're still quite small. What you need is a much more broad-based acceleration across manufacturing. In electronics, of course, there is strength, as we can see in the electronics export numbers. But we need to see substantially greater growth across the board in manufacturing. 4.8% sort of growth is an underperformance for the manufacturing sector. It should be aiming to grow in double digits. I'd say 10 to 15% growth should be the focus or aim for manufacturing.
Absolutely. So you're saying that the focus should also be on the manufacturing sector. I'm also joined by my colleague Rutarth, who's joining us from the newsroom.
I'm also being joined by market expert Ajay Baggaji on the broadcast live. Sir, the numbers are looking very promising. India has met its 6.5% growth target for the fiscal year 2025. We also saw that India also had its fair share of challenges. In the second quarter, we had about 5.6%. Then we grew up to about 6.2%. But there were many skeptics who believed that India would not reach the 6.5% target. So how do you read this reading of projections of India meeting its projections firstly? And secondly, this unprecedented 7.4% growth recovery in terms of the fourth quarter that has got us over this projection line. What contributes to this Q4 bonanza, sir?
Yeah, definitely it's a very welcome number. The street consensus was at 6.8% for this quarter. So versus 6.8, we have got 7.4. And the last quarter was at 6.2%. Against that, we have seen a growth of 7.4. One very big contributory factor will be RBI cutting interest rates on time. Second, RBI injected a lot of liquidity into the system. Whole of last year, the system was drained of liquidity. RBI put in about 8 lakh crores of liquidity. That helps a lot, and the interest rate cuts. Third is the government policies, which have helped the industry locally. And now, moving ahead, this gives us a good platform that now that we have met 6.5 for this year, we should shoot for a higher number than this for the next year. Next year projection is 6.5. We should go for a higher number now.
Indeed, Mr. Bagga, and also that this news and information is coming in just days after India was officially proclaimed as the fourth largest economy of the entire world, and a critical announcement coming in just days ahead of the MPC meeting that is scheduled to be taken place on June 4th later this week. How do you see these developments? Do you see that the RBI is looking at a very robust monetary policy at the moment? Do you further see any cuts on the horizon, or do you see that this is a good result of the cuts, as you rightly mentioned earlier, which were put in place in the April meeting? How do you read this overall situation in terms of the economic outlook of the country, sir?
Economic outlook is very robust. As you said, we have crossed the number 4th ranking. And the only reason we are number 3, we are not number 3 right now, is because the euro went up 10% versus the dollar in the first 5 months of this year. So the German economy has gone from about 4.2 to 4.6. That is the euro appreciation which is showing through. Otherwise, the German growth is at about 1%. We are growing 6.5% in real terms. 9.8% in nominal terms. So we will overtake the German economy over the next 2 years. That is a given. In terms of the RBI policy, we are expecting a 25 basis point cut, 0.25% further cut. RBI has brought down inflation to the 3% level. They've done a good job on the inflation. Monsoon is looking normal. It has set in early and it is forecasted to be a normal monsoon. So prices should be in control. Globally, commodity and oil prices falling has given a lot of monetary space to the RBI. So we are expecting a rate cut of 0.25 basis point, 0.25% in June, and followed up with one more rate cut in August. And both of those will go towards building our competitiveness because the loans will get cheaper across the economy.
Thank you very much, Mr. Bagga, for those detailed updates as the nation now looks and celebrates great projections of the GDP growth. Back to the studio, Akansha. Great news for the country, 6.5% growth recorded in the financial year 2025.
Absolutely. So great news for the country and the economic growth of the country as well. In fact, I'm also joined by Pranav, who joins us live from Republic's digital newsroom. Pranav, these numbers look really good for India, be it construction sector, real estate, defense. How do you see this?
Well, you're absolutely right. As Mr. Bagga as well as Mr. Basu pointed out, across sectors the economy has performed well and the numbers are quite in line with what was expected. But two very important numbers which reflect the confidence of Indian investor and Indian citizens in the Indian economy is that there has been an increase in the PFCA, that is the private financial consumption, private final consumption expenditure, which has grown, which means that the consumption has been on a rise. And the second important factor is that there has been an increase in the capital formation, which means that the Indian investor is investing on the India growth story. So both these, key and important aspects that the investor as well as the Indian citizen and his confidence in the Indian economy is reflected in these numbers.
Absolutely. So these numbers, in fact, definitely look very good for India. But let's talk about the sectors here, be it construction sector, defense sector, real estate. They also have reported growth rate. Do you want to explain more on that?
Well, because of the global turmoil that has been underway actually with, tariffs and the overall economic situation in light of Donald Trump's policies regarding EU, regarding the ongoing tariff war with China, certain sectors, the markets were underperforming over the past about 6 months, but markets have also recovered. And as far as sectors are concerned, the financial, real estate and professional services sectors has recorded a 7.8% growth in Q4 against a 7.2% in FY25. So, these sectors, agriculture, mining, forestry, fishing, they've rebounded strongly. So, overall there has been a bounce back, so to say, across sectors in the Indian economy.
Absolutely. So the numbers look good as far as India is concerned. Thank you, Pranav, for all the details. We'll keep coming back to you for more on this. Now, shifting our